Good afternoon, everyone, and welcome to MarketStream.live. It is July 14th. It is the closing bell, and thank God it's Friday. And it is a record-breaking Friday. Dow Jones, S&P 500, NASDAQ, all boom, hitting the tops. And it has been an amazing run, and it continues to be. As we said this morning, we had the banks that came out, good earnings. But a little bit of uncertainty off the get-go, a little bit of profit taking. But I will tell you right now, volumes today were 60% of what they are on average. So you're hitting all-time highs. And we've been seeing this for the last couple of weeks where we're hitting these levels, but not a ton of conviction. And I want to kind of give some perspective. And I'm going to use Apple as an example. And right now what you see on the screen is Apple's current float of shares is over 5 billion. Now, to put this in context, we always look at the short interest. And why do we look at short shares that are short? Because that gives us an idea of, well, maybe the reason why this market continues to go up is the shorts are getting pressured. They are getting pressured to cover. There's 5 billion shares as far as the float's concerned. There's only 63 million shares that are short. Outright short, people that think that Apple's going to go down. That constitutes 1.2%. So that means that 98.8% of the individuals that are trading, investing in Apple, are long. There is no natural short, which basically shows why the markets continue to move to the upside. There is no natural shorts or natural sellers in this market. 60% of the float is owned by institutions as far as Apple's concerned. That is a huge amount of carry there. And so with that being said, we're walking into earnings announcements. And with every earnings, the scrutiny is going to come about, which is, hey, we saw one of the heads of the largest banks in the world show his frustration with the current environment. Jamie Dimon, as I had discussed, JP Morgan Chase. It was incredible how disenchanted he is with the environment politically, which is showing frustration on the fact that growth is challenged because of the politics. Because of people not willing to govern, they want to get ratings. They want to moan and groan. I'm going to watch my language here. Instead of legislating and doing what's in the best interest of everyone and the country. And so with that being said, the markets will continue to chug along until we start to see the fact of the matter is that at 1.5% to 2% GDP and the potential for inflation going forward, which we're not seeing at this juncture, but with the potential, you're going to need to ramp it up. And at this juncture, not impacting anyone. Everyone's long. The markets are strong. The Dow finished up today 84. The S&P's finished up 11, right off of their all-time highs. The NASDAQ finished up 44. Again, you're starting to see markets, folks, that are hitting levels that we never saw. And, you know, records are meant to be broken. I remember that from Mark Spitz, the great Olympic swimmer who was the original swimmer to rack up all of those gold medals before Michael Phelps. And it was amazing what he did in the 70s. And the bottom line is that there are always going to be records be broken. I was on the floor when the Dow went over 10,000. What a milestone. I was trading in the pit at the time. So it's not like this is unusual, but the thing that basically gets me thinking, well, I got to take a step back here is the amount of conviction. There isn't a lot of volume. Now, yes, some would say, well, we're in the summer months. There's not a lot of participation. I'd say, yeah, but there's a ton of capital that's sitting there looking to be worked. One of the things that I want to note too is, look, today, yes, hitting all-time highs, but look at the Russell 2000 and then look at it in the last 30 minutes. This is what it did basically for most of the day. Grind up, grind up, grind up. And then the last 30 minutes, boom. Now this is a 30-minute chart. If you actually look at the 15-minute chart, it really shows that towards the end of the day, the level of conviction, just grind up all day, and then boom, the last 30 minutes, it basically gives back what it had made in the last 3 hours. So very interesting action. Not like this is some crash or this is a huge negative component, but it just shows the fact of the matter is that while this market is strong, and there's no doubt about it, if you're not long, you've been wrong. But the point being is, and no more analogies, I promise, is the fact of the matter is that this market does not have the volume conviction, because it's like looking at a boat. There are so many people on this boat that this boat's starting to look like this. So we'll want to be very careful about that. So size management is going to be critical. The weak dollar today really was a catalyst for commodities. Specifically, you saw that crude started to firm up, actually up 52 cents. In full disclosure, I am out of the position that I had for my clients. Gold up really nicely today, challenging its 20-day moving average, still below it, but up 11, was holding its gains for most of the day, despite the fact that we continue to see the market rally. That's something that you might want to walk into and look a little bit more into the weekend. Copper continued its upside push after the weakness yesterday, but still off of that 270 mark. Want to see that actually kick up a little bit. But we did see that the bid was holding in bonds. Now, yes, it did come off of its best levels this morning, but that makes sense since the financials started to firm up. And the fact of the matter is that going into the weekend and earnings next week, as a matter of fact, BlackRock is going to be actually reporting next week, BLK, on Monday morning. I believe when I looked at the options, that the options were pricing in a $10.50 move for the stock going into next week. That's basically about a 2.2% return or range in the $439 stock. You can see that it's up $1.29 post-market, so after hours. So the stocks that are financially related are moving to the upside and firming up, and looks like BlackRock is before earnings. But what I really want to do as far as fixed income is look at the 10-year yield. 10-year yield basically sitting at 2.32%. And the bottom line is that you need this yield well above 2.6, 2.8. You need it at 3% before you're going to really start saying, you know what, the bonds, they're in some trouble, which means that money is going to move out of fixed income into other segments of the market. Until I start seeing that movement, I don't know what the next catalyst is going to be, because we see that, for example, when you look at, Apple, 99% of the shares are long. There's no natural shorts out there. So bottom line is that who's going to be the next entrant? These are getting pretty saturated, even though we're hitting all-time highs. That's just because we don't have natural sellers. Last but not least, let's just take a look at the VIX. And the VIX is now at single digits at $9.50. We're starting to get into these historic lows. And these are levels that I look at and I go, when you see these things, you start to see the potential of complacency kick in. Now, it could stay at these levels for a while. As a matter of fact, you look at this, basically from May through June for the most part, until we got towards the tail end of the June a couple weeks ago, you hadn't seen volatility over 10 or barely just straddling around 10. This is a very low implied volatility market, and that is frustrating for a lot of traders and investors that utilize volatility as a core component of their investment strategy. So with that being said, watch it when it gets into these low nines, these mid to low nines, then maybe even getting into the eights. When we see this level challenged at 9.5, this is where all of a sudden maybe some blips of uncertainty come in. And boy, we're walking into a season, an earnings season, that will be scrutinized. So look at your portfolios this weekend. We are going to be kicking off this earnings season next week in earnest. Take a look at it. Get a feel for what your risk profile is. We're trading at all-time highs. How are you feeling about these underlyings that you have, or the sector exposures that you have? And of course, if you ever have any questions, considerations, you want to run some stuff past me, you can always email me at jcusick@moneyblock.com. We can plug it in. I'll do this for free. I'll look at your portfolio, I'll give you a risk profile, and I'll give you a 6-month perspective with a 95% probability of potential risk and reward. In other words, whether it will be up or down a certain percentage with a 95% probability over the next 6 months. I think that's worth it. All right, folks, join me next week. I'm going to be back online covering all of this information. We're going to have a lot of action potentially next week with earnings kicking off in earnest. So stay tuned to MarketStream.live, and thanks for watching this week. We'll see you and have a great weekend.